Hey traders and investors, it's Serge Berger here. Today, let's have a look at gold again. Gold, of course, continues to be a very well-performing asset class this year after having a number of terrible years behind us and topping out in 2011. But if we look at year-to-date, the GLD ETF was up as much as about 20% or so just a couple days ago. Now it's up about 15%, so still looking very good. Last time I discussed the GLD in a video in January. You can look at that video on YouTube. I discussed that it's a good idea to own GLD as a strategic trade for 2016, and indeed that has ended up being a very good call so far considering the year-to-date move. Now we can draw some very simple lines here, and there's a lot of lines to draw here, so it almost becomes a little bit silly to draw these lines, but you can see we had a classic breakout, and basically what's taking place here now, we're getting quite overbought in the near term. So I wanted to show you guys where I think it might be a decent idea to get back in and buy some of this GLD. If you've bought it in January, then certainly I think this is a decent spot to take some profits and maybe get back in if you want to be tactical about it. So that's the big picture of you. Let's zoom in here on the daily chart. And what you can see here, and I like to use a MACD, which is called a moving average convergence divergence oscillator. Very simple stuff. It just basically means when the stock gets too far removed from the medium term or near term moving average, depending which ones you see, you get very overbought readings. And you can see the GLD now is at overbought readings that we last saw. Let's see, we have to go back to 2012. So it's been some time ago since we saw the GLD overbought like this. Now, overbought readings like this indeed can last for some time. So that in and of itself is no reason to short it or even just get out of it at all. It just basically means to be a little bit cautious. So if we look at this a little bit more near term, you can see a very logical space to look at would be a previous high here from October 2015, or maybe a little below, so you can kind of just connect as many dots as possible. And you can do this kind of stuff when the market's volatile. So I would think just based on this, a 112 area is a pretty interesting spot for the GLD to get back down to, where we could see some better support. The 112 area would also mean that the GLD would fill its up gap from February the 8th. You can see there was a little bit of an up gap here. And if we do a basic Fibonacci retracement level, you see that equates to just a little bit more than 38.2%, which is an important Fibonacci retracement level. So I would start to think around the 112 area, maybe even a little bit below. It'll be a pretty decent risk reward again to start buying the GLD for, and ultimately a first target back up at 120, and then beyond that, we'll take it step by step. So I hope this makes sense, guys. Please like this video, subscribe to the channel, and as always, I'll see you in the next video.